Good evening. This is the post-market recap by AGI Era. Today is Thursday, February 12th, 2026, and it is shortly after 4:30 p.m. Eastern Time. The scoreboard and technicals. The U.S. session has officially wrapped, and the price action suggests a decisive victory for the bears, with major indices retreating sharply across the board. The S&P 500 finished the day down 1.56%, settling at 68832.76. Technically, the index is now trading firmly below the psychological 6,900 level, a significant breach that indicates a loss of recent upward momentum and potentially signals further downside if this key support is not reclaimed swiftly. The inability to hold above this level after a period of strength is a red flag for technical analysts. The Nasdaq 100 plunged, closing 2.04% lower at 2487.11, reflecting substantial pressure on growth-oriented technology stocks, which often bear the brunt of risk-off sentiment. The Dow Jones Industrial Average finished down by 669.42 points, underscoring the broad-based nature of today's sell-off and indicating that the weakness was not confined to a single segment of the market. Crucially, trading volume today was elevated, which implies that institutions were actively selling positions. This heavy volume lends conviction to this downward move, suggesting it's more than just a fleeting technical pullback and could signal a more entrenched shift in market sentiment. Market breadth and sentiment. Under the surface, the fear gauge, or VIX, is trading at 20.82, a significant jump of nearly 17.96% from yesterday's close. This surge in the VIX, pushing it above the key 20 level, suggests a notable increase in market anxiety and an expectation of greater volatility ahead. While still below panic levels, this move indicates a clear shift from complacency. We are seeing a clear divergence in sector performance. Money flowed noticeably into utilities XLU, which gained 1.48%, while technology XLK lagged significantly, dropping 2.64%. The spread between utilities and technology today tells us that investors are favoring defensive, safety-oriented sectors over growth. This rotation indicates that Wall Street is positioning for a slower growth environment or heightened economic uncertainty, seeking refuge in sectors known for their stability and dividend payouts. The macro engine room. The primary driver of today's moves can be traced back to the bond market, though with a nuanced signal. The 10-year Treasury Yield settled at 4.15%, ticking slightly lower on the day by 3.3 basis points. This move is significant because while the equity market experienced a sharp sell-off, the slight dip in yields suggests a flight to safety within the bond market, but not enough to alleviate the broader concerns weighing on stocks. This continued elevated level for yields, even with a slight dip, directly creates a persistent headwind for interest rate-sensitive sectors like housing and certain segments of industrials, as borrowing costs remain a significant factor for consumers and businesses alike. Meanwhile, the U.S. dollar index is marginally higher, gaining 0.09% to 96.81, reflecting its safe haven appeal amidst global market jitters and potentially a stronger-than-expected jobs report from earlier in the week. Crude oil is trading around 62.94, down 2.61%, responding to concerns about global demand in a potentially slowing economic environment, further hinting the AI and tech monitor. Turning to the leaders of this market, artificial intelligence and big tech. This sector, which has been a primary engine of recent market gains, bore the brunt of today's selling pressure. NVIDIA finished the day down 187%. Microsoft closed down 0.61%, while Apple saw a substantial drop of 5.05%. Other Magnificent Seven movers included Amazon, which fell 2.24%, Meta declining 2.79%, and Tesla dropping 2.67%. Even Alphabet Google was not spared, closing down 0.63%. The widespread weakness in this group is notable because it signals a potential rotation out of the high-flying tech names that have driven much of the market's gains. This could be a reaction to higher interest rate expectations, profit-taking after a strong run, or a broader reevaluation of growth prospects in a less certain economic landscape, suggesting investors are becoming more discerning about valuations. After hours and look ahead. Looking at the after-hours tape right now, share of Airbnb, ABNB are showing strength, up 4.67%, alongside Lam Research Corp, LRCX, gaining 2.78%, and KLA Corporation, up 2.69%. These moves could be earnings-related or specific company news driving individual stock performance against the broader market trend, indicating that idiosyncratic factors can still provide pockets of opportunity. As we pivot to tomorrow, the economic calendar brings us the latest initial jobless claims and existing home sales data. Investors should specifically watch these releases for further clues on the health of the labor market and the housing sector, which will undoubtedly influence the Federal Reserve's future policy decisions and broader market sentiment. Any signs of weakening in these areas could exacerbate current market anxieties. That is your comprehensive closing update. We will see you tomorrow morning for the overnight brief. Disclaimer: this podcast is not financial advice. Data may be delayed or inaccurate. Always conduct your own due diligence.